GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as rewarding as finding money in your old winter coat pocket. I'm your host, Jay Hamilton, and today we are joined by Christopher Cameron, governance lead at GFX Labs. Chris is also a longtime significant contributor to MakerDAO, and he recently sold all of his Maker holdings. In this episode, we delve into the reasons behind his decision. Now, this episode is part of a larger three-part series exploring different perspectives on Maker. As you will all know, we've been quite bullish on Maker for a while, and we wanted to make sure to give you guys an update with various perspectives. So next week, we have Sam McPherson, CEO of Phoenix Labs, and contributor to Spark Protocol, a leading sub-DAO within Maker, or Star as they're now called. And then the following week after that, so 3 weeks from now, our pro team is going to come on the show and share their insights on Maker and tell you why they remain confident in the project. Now, before we jump in, we are just a few subscribers away from 10,000. So make sure you subscribe today. It's probably your last chance to get in and subscribe before 10,000. And if you do, you could win our crypto investing masterclass valued at $500 and many other prizes. Before we jump in, let's take a moment to hear from our friends over at Uphold. Meet Uphold, a trading platform that's changing the way you think about money. Imagine this, earning up to 4.9% APY on your US dollars. No catches, no lockup periods, and no fees. And yes, it's FDIC insured up to $2.5 million. They offer access to over 300 digital assets, which you can trade, store, and exchange with confidence, knowing Uphold operates with a 100% reserve and a transparent model. Create your account, fund it with a few taps, and you're ready to go. Click the link in the description and join Uphold today. Chris, welcome to the Milk Road Show.
Thanks for having me.
Yeah, it's a pleasure. Okay, I want to start with before we get into the details of your decision to sell your Maker tokens and where you're at right now and what you want to share with us on the show. I just want to give everybody a quick primer on Maker, because we haven't really talked about it on the show for a while. What makes Maker so special compared to other stablecoin issuers?
That's a great question. So Maker is the distant third place stablecoin issuer in the market behind, of course, Tether and Circle. It's also the only real successful decentralized stablecoin that's really seen much scale or usage beyond as a farming token. And we can talk more about this later, about how I differentiate stablecoins from savings products. They're not the same thing, but DAI, which is issued by Maker, and now USDS, these are the Maker's attempt to compete in the stablecoin market. Maker is unique, or almost unique, amongst DeFi protocols in that it is cash flow positive. There's a lot of value inside of Maker. And I would even go so far as to say, before we get very far, that the bull case and the bear case for Maker are exactly the same, in that there is a ton of value inside Maker. It's just, how do you unlock it?
Mm-hmm. Yeah, it's. I love that you brought that up, because that is the exact reason why we've been so bullish on Maker for so long. Is the fundamentals are so strong within the project, especially when you're in a space which often many of the tokens and projects you're investing in have minimal fundamentals, if not no fundamentals, and they're just purely speculative and purely hype. And that's okay. And there's investments to be made there as well. But as you said, Maker is quite a strong project in the success it's had so far and the cash flows that it's created. Can you just tell us a little bit about how you got involved in Maker and what your contribution is to the Maker DAO?
Sure. So before we go much further, I think you introduced me under my real name, which is fine. But most people who are familiar,
oh yeah, true,
probably know me as PaperImperium, because that's what I sign forum posts and Twitter posts and the like with. But there are plenty of people who know my real name, so it's not a problem. So I first found Maker very early in 2021. I'm a value investor personally. I buy grocery stores and tobacco companies and the like. So Maker's cash flow and, at the time, growth trajectory and market cap, I found it appealing. I thought this thing can miss on a lot of targets and still return some money to token holders. And to some extent it has. At its core, people asked me last week and the week before what changed at Maker. I would say Maker didn't change, just my patience ran out. Like I say, the bull case and the bear case are exactly the same. Maker, I've been involved in Maker governance since the beginning. I was out of the gate the first and largest delegate, and then went in-house very quickly with GFX Labs, which has a broader governance portfolio. At the time, it was Compound and Uniswap. Now, I spend most of my time at Optimism, Arbitrum. We also continue to hold a lot of Uniswap delegation and are active in a number of other protocols that are less relevant to this discussion. But I work full-time in governance now. So with Maker, you kind of have to be working full-time in governance to keep up with it, because it's a complex beast and it has become less and less transparent over time.
And I want to get into some of the challenges, but just quickly, can you explain what does it mean to be the largest delegate within Maker? Does that mean that you hold the tokens yourself, or that others are delegating to you their votes? Can you just explain that quickly?
Yeah, so I should be clear that I'm not a delegate now.
Right.
And if I was, I would not be allowed to tell you, because there's a bounty on doxing delegates, and delegates are fired as soon as they're identified. It's a little Orwellian, but that's Maker. So Maker is not unique in that it has a delegation system. So many protocols utilize this. And what it means is that you hold the voting power, but not the actual tokens in most cases. Maker is older technology than a lot of more modern governance tokens. So the token does have to be locked in the governance protocol, but the delegate does not have your tokens. They can't move the tokens. They can't spend the tokens or borrow against the tokens. It's a way to separate the voting power from the actual asset. And this is very common across large DeFi protocols.
Okay, so let's chat a little bit about the challenges that Maker is facing. And maybe I don't want to go too far back. I think that this could be a full episode just on past challenges, but maybe if you could give us a little bit of a history lesson on like the challenges, and then we can get more into the rebrand to Sky and the more recent challenges.
Sure. So Maker is an old project by crypto standards, so I won't go all the way back into the primordial ooze. I'll just start with the passage of Rune's Endgame Plan in March of 2023. So before we go any further, I want to lay my priors on the table. GFX, where I work, we led the opposition to Endgame. So just bear that in mind, that we generally have been critics of it. I'm sure you'll have a pro in-game person on with Sam. So I think you'll get a balanced view if your readers or your listeners tune in for the next podcast as well. So in-game was a sprawling, large package of reforms, updates, and new things, very governance focused. Like anything that big, I think there were some good things in it and some bad things, but it's changed a lot. So almost from month to month, it's had significant changes. An example of this is how there used to be 14 paid delegate roles. So before Endgame, any delegate that had a certain level of delegation was eligible for pay. This kept people coming in the door, paid for their time to read proposals, diligence counterparties, discuss the merits and try to become subject matter experts on Maker. That went down to 14 slots with Endgame and has consistently been winnowed down. So here we are, I think 19 months later, and there's only 6, all of which are directly controlled by Rune.
Wow.
Yeah, so there was a major outflow of voters of staked Maker as soon as Endgame passed. Basically, the previous generation of VCs, I don't want to say dumped because that's a pejorative, but they exited. They voted with their feet. Another generation of VCs came in. A few of them, I've seen at least 2 sets of them come in, attempt to do governance, realize it was that there's no governance. It's very hard to be an activist at Maker because Rune has so much Maker. So he has so many votes, and also Endgame has structurally changed governance so that it's very difficult to become competitive because you can't build an ecosystem of a pluralistic ecosystem of voters. And a good example of that is the delegates, right? So to be a delegate at Maker, you're required to be anonymous. And if they find out your identity, you are removed, no longer paid. As I said, it's a full-time job to keep up with Maker. So casual delegates are probably not a value add at Maker. But, imagine you are an institution somewhere with $30 million worth of Maker or more. Are you going to delegate to a random anon? Yeah, I mean, it's
probably not. That's definitely not
Yeah.
what that type of investor is looking for.
Right. And it's difficult enough to convince investors to delegate as it is. Maker also has some technical issues that makes it incompatible with some custodians. So it's already an uphill. It's always been an uphill battle to get voters to delegate at Maker. But basically, the governance participation went to 90% plus just ruins delegated Maker. So all of his, so it means that all delegates are people who their paycheck is tied directly to pleasing him, which is fine. That's his prerogative, but it means that if you go back and look at voting since March 2023, you see it's pretty homogenous.
Mm-hmm.
And I think that's not an accident. Again, I don't want to like trash Rune on this because he's at least showing up, but it's important to know that governance is not healthy. And I think you get a lot of an echo chamber. So that's kind of how we got to where we are now, right? So we'll skip all the minutia, the governance backroom, drama, and we get to today, and we have, I think you see the fruits of this system in the launch, right? So what did we get? We got a logo that was reused from Secret Network. Right? It's literally the same logo for USDS as for Secret Network, and just different color. We got a fairly generic ticker that they had to go buy off of one of the many other USDSs. They bought it from Stably. You can find the trademark purchase if you can go pull the files if you're interested. I don't know how much they paid though. You saw a name Sky, which I don't have a big problem with the name, but it's not exactly discoverable from a search perspective, right? There's a lot of, it's a very common word. There's also some big companies named Sky already. So that's probably, I feel like perhaps you could have come up with something a little better. The announcement video, looked like it was shot on an iPhone, and some people have compared it to a hostage video. USDS right out the door was not available even at Spark. There were no integrations ready to go on day one. I think all of these things, we can keep going, but I think all of this just comes to, after a year and a half, after all the blood, sweat, and treasure expended, it raises the specter that this is not a credible plan and that execution risks are high. And it's hard to believe. Granted, we all have the benefit of hindsight and have seen all these things fire off very quickly in quick succession. So maybe in isolation, they would have been less of a red flag. But I think most of your listeners would have, if they'd seen these materials, if they'd been in the room, the decision-making process, they would have said, we can do a little better than this for what we're spending and the amount of time it took. And that's kind of where we're at today. And so now it goes up for a vote, I think today, whether to retire the Sky token. So your listeners may or may not be aware that Maker, in addition to launching a new stablecoin, USDS, they also launched a new Gov token, Sky. Now, both of these are supposed to be fungible with the previous tokens. So USDS is, I'll just say it's a wrapper for DAI that can be seized. That's the only difference. It's a different ticker. It's all the same stuff in the back end, the same backing. So if you were comfortable with the financial backing of DAI, you will be fine with the financial backing of USDS. The only difference is the name and the fact that the token contract is upgradable. Sky is the same thing, but for Maker. It's a redenomination. So one Maker gets you 24,000 Sky. It doesn't really do anything yet, like it can't vote, but there's been so little migration from Maker to Sky that it looks I think almost certain that it will be voted to be retired this week, but we'll have to see what the vote says. I think it's a little ironic that Rune's like, well, this isn't working, let's put it to a vote, but it's going to be his 6 delegates that make the decision. And I don't know what he's communicated to them or if they have their own independent opinions or not.
Yeah, so much to unpack here. But like the few things that stand out to me were from the outside looking in and sitting in the position that most of our listeners will be in, a rebrand of DAI made a lot of sense to me to a USD something, right? Because that is a familiar, all of our stable coins are USDT, USDC, et cetera. And that's really what stable coins represent, is they represent a stable towards some fiat dollar. And so that I understood. The rebrand to Sky, don't know if that was necessary. I agree with you from the outside. It was a little bit of maybe an eyebrow raise as to why the name was chosen, because it is such a common name that means so many other things. Let's just chat about your recent decision to exit. What led to that? Is it the things that you've mentioned so far? Is there other challenges? It sounds like really what you're saying is that we have a leader in Rune who has a lot of control, and control in one person's hand is a scary thing. And it also is kind of against what the DAO system, decentralized system, is aiming to achieve. Am I explaining that right?
So let's just remind everyone, we're going to talk right now. This next few words is going to be about my personal financial decisions.
Yes.
It's not reflective of GFX Labs, anyone we have a business relationship with, or any other large holder of Maker that I know of. So my decision was simply that after several years, I have grown skeptical that there will be high returns for me as an investor. So for a while now, the buyback has been paused because there's not been enough funding. The way it works at Maker is the buyback happens when there's enough surplus funding, but the expenses associated with the new launches have depleted the surplus. So it's just the buyback is not on right now. So it's unclear what the buying pressure is going to be. Also, I've now so centralized control. I'm not an ideologue. I'm not a decentralization maxi. I believe that decentralization works well for some things and not for others. I mean, I think everyone would agree that highly centralized projects it's like a monarchy. It's simultaneously the best and worst governance system you could imagine, because it comes down entirely to the competence and benevolence of the one that's in charge. And I've just now lived through enough cycles of Rune pivoting from one shiny thing to another. I mean, let's just go since Endgame. So when Endgame was launched, there was a big section about how clean money and environmental advocacy was going to be a key brand differentiator for Maker. It was only a couple months later, I think it was April or May, that core concept was immediately jettisoned for AI, and Maker was going to be involved with developing AI, and other protocols would pay money or lock tokens to access Maker's fancy governance AI. And I recall being in meetings where it was literally just Rune typing into the ChatGPT interface, and then AI is not talked about much anymore at Maker. After that, it was, I may forget the order of things. I think it was then L2s, where the big L2 boom was beginning to launch, and Maker was going to launch a Maker chain. Oh, and it was going to be a Solana fork. And what was it going to do? I was never quite clear on that, because all the DAI and all the collateral are on Ethereum. So what would it do? And then after that, the Athena got big, right? So then it was Maker was going to get into the basis trade, which it never did directly. It did end up getting substantial exposure to Athena assets, which is its own whole separate conversation. I think it definitely got out over its skis with that, but it's kind of a separate thing. And now here we are. We've come back to the branding. The brand is launched, and it's this constant change from one thing to another. And I think this all goes back to the echo chamber. There's not anyone in the room who can say, maybe this isn't a great idea, or maybe we should do something else. You have to understand that when Endgame passed in March 23, like half the developers quit. The governance facilitators all quit. All the old delegates were purged because they were identified, so they were not anon. So very quickly, there were not a whole lot of other. We got to be kind of a lonely voice out here, and So, just my personal decision was that I just needed to finally sell and put the money to work somewhere else.
Hmm.
Like I say, the bull case and the bear case has always been the same, that 90% of Maker's problems are of its own creation, which means they should be solvable, right? And, plenty of poorly managed companies have made a lot of money over time, and Maker isn't really any different in that regard. So there's value there. I just personally did not want to continue. I might buy back if it goes down low enough, or if there's a change in how governance operates. But
So it sounds like Endgame was really the tipping point that changed a lot of the internal structure. Am I correct in saying that? You look like
yeah,
you were
I,
going to
I
jump
think
in there.
that's an accurate summary. I mean, so Rune always had large influence just by virtue of the fact that he has like 13% of the fully diluted supply, or 12%. I forget.
It's large.
Large. It's larger than anyone else,
Mhm.
and that was fine. I think that equilibrium, it was not the equilibrium I would choose to live at, but it was fair, I guess. Like, it was an even playing field. Like, whereas now there are structurally a lot of things in place so that it really inhibits the ability of anyone to challenge him. So it's not just the anon delegates. It's like spending. All right. So it used to be, if you worked for Maker, you would have to come with a budget. You'd say, here's the money we need for the next 6 months, or however, I think it was usually 6 months. Here's how we spent the last one, et cetera, et cetera. You go back and forth to delegates, and then it gets approved. And then you can watch in real time, like the vesting stream. So maybe you don't know what line items they're spending on, but you know that, the Oracle's people spent this much, or the core devs spent that much, or the front end people spent this over here. Now all of that's largely been consolidated under a bucket called the launch project, which is explicitly exempt from oversight and transparency requirements. So at first, the justification for this was because the branding needed to be done in secret, and so you couldn't see who they're paying for, which I think we can all say that didn't work out too well. But over time, all of the regular operational expenses also got put under launch project. So that's why launch project gets a huge amount of money. But they've begun in the last 6 months to about every quarter make voluntary disclosures with some kind of flow diagrams. But it's just how would you have an opinion on Maker as a activist if you don't have access to the financials, like what is being spent, other than at the very high level? You can see how much is going out and coming in, but it's very difficult to understand where, if you spend $50 million, how much of it is going to A versus B. And also this, it's, as I said, it's very difficult to have any control over the strategic vision, because it's increasingly done behind closed doors. I mean, a great example is the Athena onboarding, right? So I personally think Athena is a very clever, interesting financial mechanism. The way it was implemented at Maker, I took a few issues with, but you saw on Twitter, you saw the head of Spark, teasing pools being spun up on Morpho before any hint of it was ever put on the governance forum, right? So new asset on a new external protocol, governance is informed, rubber stamp this please, after everything is set up. So just a lot of the decision making is out of the public view, so it makes you very reactive if you're not in the room, and it's hard to work from that.
Yeah, certainly. Yeah, it sounds like a lot of this comes down to the structure of governance and the structure of decision making, not necessarily, as you said, all internal issues, all internal challenges. I want to go back to something you said at the beginning of the episode. You said that you see a difference between a stablecoin and a savings account.
That's right.
Can you explain that difference? And I think that'll lead us into the final part of this conversation today.
Yeah, so I've talked enough about the problems. Let's look at the opportunities, right? So this discussion, I think, really centers around how I view the opportunities and challenges in the future going forward, because everything else is behind us, sunk cost. So DAI is a stable coin, right? It's like I say, a distant third place, but it has a clear product market fit. It has probably, unfortunately, a fairly mature market, total addressable market. It has a differentiation between USDC and USDT, and yet it also is big enough that it taps into the network effects of liquidity, and you can use it like anywhere that has Coinbase commerce. You can use it to buy a coffee. I don't know how many people do, but it has a certain level of what I call moneyness, right? So like it is used as money on some level. And you can see this in that people require less yield to hold DAI than they do some alternatives, right? Now, and of course, Tether and USDC have to offer even less yield. In the case of Tether, nothing.
Nothing.
So, because they have this moneyness. So like DAI is like on the cusp of it. Like it's the also ran, but it's still highly profitable. Like even, as this modest, distant third place stablecoin. So now let's look at USDS. It has no integrations. You can't use it anywhere. It basically, and if you ask Maker, ask Rune, why would anyone use USDS? It's just DAI that's freezable. What's the value proposition? And the answer is yield, right? Like they say we'll give attractive yield, but that's not quite the same thing. It's a different business. Right. So, you don't care the brand of your money market fund in your personal portfolio, but you do care that the things that you use for transactions, like, it says Visa or MasterCard or maybe American Express, the payment network, you care a lot about that. Even at the same bank or credit union, if you bank at a credit union like I do, you have a checking account and you have a savings account, and the yield you demand on the checking account is probably close to zero. There are high yield checking accounts out there, but they're in general, the savings account has to offer higher yield. You see, this is like obvious when you think about it, right? So even though they're very liquid, right? I can, in the modern age, pull out my phone and move, $10,000 over from my savings to my checking, and boom, it's instantly available for me to spend. USDS and DAI are like in the same boat, right? The difference is there's not really, Maker doesn't really get much out of having USDS. I think at this point, though, I'm not a fan of like I think it shows weakness at this point if we retire USDS. I think sharks are going to smell blood. I think it's best to plow on ahead. So what's the best use for USDS? I think number one, stop competing on Ethereum. You're just cannibalizing DAI supply. Like this is a profitable, mature business. Leave DAI alone. People like it. It spins off a bunch of money. That cash can be used to grow the business elsewhere. So USDS, where can it go? It's not money per se. So where can it compete? I actually think Solana is a really ripe market for this because if you go to like the wormhole portal token bridge, like there's already like $10 million worth of chai, which for those who don't remember, a long time ago, the original first generation of Maker devs also had a tokenized like savings rate for like, when you put DAI, instead of SDAI, you got chai. So it's an old simple ERC20 token, which made it easy to bridge. And this has been hauled across to Solana to sit in DAO treasuries and people's personal accounts over there, completely with no support or marketing effort at all on the part of Maker. So there's clear that there's at least some non-zero demand for a savings product. There's no like T-bill of DeFi over on Solana like there is in Ethereum with SDAI, because that's kind of the role that it plays. So, the staked USDS, I think, can be quite successful. And then while that is getting adoption, then it's going to be a long, slow slog to get to like that moneyness, right? Because that's a big moat. The trouble is, as a savings product, as soon as your yield is lower than the competitor, it's hot money. It's in and out, right? I mean, we saw like Athena take 150 million out like just last week, and that was after 2 weeks before they put 400 million in. And they're not the only ones. Everyone's going to do that as they maximize yield. So we got to get to that sticky business of like being money, right? Because then there are high switching costs and fewer alternatives. And this is particularly true in Solana. I think the stablecoin market on Solana is ripe for disruption. So I see a big opportunity for Maker here if they can just execute, like stay focused. So, the whole end game has been focused on governance games and internal navel gazing, about the meaning of the atlas. Like, I shit you not, like, can I say that?
Yep.
Yeah. I mean, a lot of these meetings were like Bible study sessions, like multiple times a week. What is the word of rune mean in this Atlas like paragraph here? None of that's important. Focus on the user, right? Like, what's the value proposition to the user? And I think while we have savings products galore here on Ethereum, high quality, predictable savings, very safe savings products are rare, I think, on Solana. And we'll have to see which of the L2s is ripe for disruption. I think there's potential on Base and Arbitrum and Optimism, but I think I have less well-developed views about what the particular competitive advantage would be there. But I think there's big opportunity ahead, and it could be the first time in years that Maker actually sees growth, and it's a new market, right? Every USDS on Ethereum risks just being a die that got burned. Like, so you're paying people money to move from one thing to another. So that's where I sit. Again, the bull case and the bear case is still the same. It's execution, and then upon successful execution, don't waste the money, fritter it away on pivoting to AI or something.
Yeah. I mean, there's a reason it's not easy to build a large successful business in any industry, let alone one that moves as fast as crypto does. I want to finish with a question that you sort of already asked in this episode, which is, what would it take for you to buy back in? And do you still have hope that Maker can figure out these issues and these challenges that they're having?
Yeah, I mean, so Maker is unlikely to ever go to zero, right? Like it's cash flow positive. How many crypto projects can you say that about? I think I've just had a couple years now, and particularly the last year and a half, where I've just seen the money wasted. I mean, Spark's a great example, right? Like I don't want to say it's a waste, but it's a cost center, right? Like, sure, it literally is cash flow positive, but it has fairly significant multi-million-dollar costs to operate. And in a world where Spark didn't exist, would you just put it all on Aave and Compound and Morpho and Euler? Yeah, you would, and you wouldn't bear any of that cost. Maker's just full of stuff like that, where you got to really peel it back, and like, it's not clear what the cost structure is in a lot of places. So I think for me to get personally involved again, I would need to see a change in how governance is run, even if it's simple as just more transparency, so that you can be informed rather than in Rune we trust, because I don't trust him at all. I don't think he's malicious at all. I think he wants the best for Maker, but I think he, quite frankly, is isolated and is often taken advantage of because he surrounds himself with only people who tell him yes. And I think that has led him to be, like I say, kind of taken advantage of a few times in the past. So I would need to see either Rune, really significantly return to transparency in the structure of how governance operates, or I guess if the price went down enough to bear the risk again, I'd maybe be a sucker.
PaperImperium, Chris, this has been a fantastic conversation. Thank you so much for sharing so openly. It's not easy to take the contrarian side and the bear case. We get mostly bull episodes here, but we're really focused on trying to give both perspectives. And as we said, everybody tuning in, make sure you listen in. Next week, we have Sam McPherson from Spark, which we brought up a few times in this conversation. And then the following week, we're having a member of our pro team, our research team, come on and share their thoughts. So it's a complex situation over at Maker, and one that, Chris, we greatly appreciate your honest and vulnerable opinions sharing with us today.
Sure. Thanks for having me.
It's a pleasure. Everybody, thank you so much for listening in. Have a wicked awesome day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, We're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note. This show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening, and my friends, have a wicked awesome day.